Good morning. We're going to take a quick look at currencies, and we're starting off with the euro. Now, the euro hasn't really been doing anything much, but we have made a top in euro, and because we're extending this right shoulder, obviously as long as the euro stays below 122, we are right to be short of it, which we are short of the euro. So I don't see any reason to change opinion of the euro. I believe that it's going to come down towards 120.64. I think we go below here, and that is 120.58, so we break 120.50. Our next big level is this 119.76 with a little bit of support at 120.03, obviously round figuritis. So we will be watching this area quite quickly. I do think we're going to go down towards that area quite quickly, and because of that, I think we have, well, I'm as sure as I can possibly be that we have the right position being short of the euro. Now obviously we can't look at the euro without looking at the dollar index, and as you can see, the dollar index is reacting virtually identical to the euro but inverse. So euro's making a top. You can see here quite clearly that the characteristics of this market is making a base. So what we really need to do is get above 90.70, 90.80 quickly, and then we can carry on with our long positions. I mean, I'm long of the dollar index down here. It seems like I'm really bored with it at the moment, but you know, I need to carry on with the way I think the markets are going to react, which I believe is long dollars. Now dollar Swiss, you can see it's made its base. We've broken above here, or we will be in a minute, and that's 89, funny enough, where we are now. So we keep going on dollar Swiss. There's a very good percentage chance that we're going to reach at least, let me show you, at least 89.74, and I think even beyond. I think we've made this break. I think if you do the mathematical calculation, and the mathematical calculation would be just taking that high, minusing that low, that gives you a total of 288 points. You add 288 points to the break point, which we've done. That gives us a total of 93.33. Alright? So it's still quite a way off, but we're heading seriously in the right direction. Okay, so no problems with holding dollar Swiss longs that I can see. Now obviously all the different markets, you have different chart patterns that show you basically the same thing. So we're long of dollar CAD. Alright, we're a bit overbought, but we haven't gone up that much. So it's different looking to the dollar Swiss chart and the euro chart. Well, obviously it's back to front, but it's still looking like it wants to break higher. So while it's doing that, while we are holding above certain criteria, at the moment I've got that around about the 127.20. So as long as we hold that and we look to take out 128.30, I think we're going to see another 100 points on the top side. I'm looking for 128-ish, and then 129.90 93, which is up here. I don't see any real problem with getting towards those higher levels. Now the Aussie, again, look, you are getting these, okay, they're variable patterns, but they are the same, they're telling me the same thing, okay? They're telling me currencies looking to go lower. So whatever chart you're looking at, it is a whole, the basic thing is to be long of dollars, short of the currency. With the Aussie, you've got down to 75.59, then you've got 74.73. You've got the resistance obviously up at these higher levels, and if you're not short already of the Aussie, you may well get another bite of that cherry up around the 77.00, 77.10 area. If we do that, if we see that, we go short of the Aussie as well. I know we're loading up with the markets the same way round, and that's understandable that people are worried. But obviously, when the dollar turns, they don't all go up and down at the same time. So you have to pick your levels in the correct way so that it gives you a fighting chance of being able to manage the stop loss much better going in, as I say, at the different levels. Obviously you can see where dollar yen has made the break. Up it went, we'll take that off there. Up it went, came down, made that flag, up we go again. We're nearly at target area. Alright, so be careful of that, because it's near enough done it up at this 105.20. So currently we're at 104.88. Again, pullbacks in dollar yen to be bought. Ready? Remember, it's also risk on, risk off currency. So you have to watch the stock markets as well as watching the dollar yen currency separately. Now, you can see with cable that there is this feel about cable, if you like, where it wants to try and go up. Unfortunately, what sterling's doing, it's actually not being able to break above this little area here. Now, you've got these that are flat, you've got your technical indicators that are flat, but unless sterling makes a big break above 137.60 and stays there, by definition, what can't go up has to come down. Now, where you're seeing these different currencies react at different times, you have to understand that they don't only trade against the dollar, they trade against each other. So you'd have sterling yen, sterling CAD, sterling Aussie, sterling Kiwi, sterling euro, or euro sterling. You know, you've got these correlations within this big band of currencies. So if you want to see where the actual value of sterling is, you can look at them across the board at comparative rates with sterling, with the other currencies. So you look at sterling Swiss, sterling looks strong. Sterling CAD, again, looks strong. So sterling Aussie, breaking higher. Sterling Kiwi, breaking higher. You know, so there are other factors, if you like, that determine where sterling will go in the bigger picture. So to the dollar, sterling can actually go sideways. But if you see the currencies fall, even if sterling don't move, the sterling against other currencies will, by definition, get stronger, because the currency, you're looking at not maybe the strongest currency, but you're looking at the weakest currencies as well. So, when you're looking at these sterling yen, sterling CAD, sterling Aussie, blah de blah de blah, and so on, that is looking more weakness in those other currencies than sterling strength, because against the dollar, you can say that baby ain't moving. It's just another little thing I throw in every now and again. Anyway, there's my little rundown on currencies for the next couple of days, and we are positioned that way, and we will stay positioned that way until something shows us not to be positioned that way. And at the moment, it's not showing me to get a shot of all my positions that I've got. I don't know if any of you want to trade the Aussie Kiwi, but I've bought the Aussie Kiwi, and there are reasons for that. Just be careful. You know, it's like anything. In the world of uncertainty, just be careful. But look to the other currencies with the mixed correlations rather than purely against the dollar. Okay, I've bored you enough now. I'll catch you all later.